Okay, welcome. On British Pound Japanese Yen, we'll do some post analysis. Let's look at what we got yesterday. Um, I was looking at taking sales here, stop loss above the structure, TP to be somewhere around here, which is 1 hour. On the other hand, I was using, I don't want to call it a cheat, but I was using an aid. You understand? I was using an aid to know where price might react from. Okay, I was using an aid because, like I was saying, or like I said yesterday, there are times markets um, would act in a way that it does not conform with an ideal structure. So you have to do what? Find a way to optimize the situation, maximize whatever your learning curve. You have to squeeze as much juice you could get from asking yourself the they call it the five wives and one husband, which is one of the questions when you're carrying out um, a quality management system audit. Okay, when you're carrying out an audit of any system, I think it's part of the checklist questions you ask. Why did price do like this? What would have caused it to do like this? When did this occur? You understand? Who could have influenced this kind of action? All those WWW questions, then the H stands for how did this happen? Did this go up, then come down? Anyway, this is going beyond the scope of the forecast and this thing. I don't want to go too deep. I've been venturing into gray zones lately, so I want to keep it short, simple, and sweet. If you want to understand further, you can always reach out and we'll discuss about it in details. Okay, so what I was looking at was to take sales here and price played beautifully. Now let me put all of this so that you get a better. You see, this is all the price action responsibilities that I undertook. So as you can see, this is what I'm talking about. Price came right on this first touch, second touch, on the third touch, price did what? Reacted from it. It came into this zone, this demand zone, which went as low as this, came into this demand zone, and price reacted from here going upwards, came back again to this upper level of the channel, and as you can see, it's trying to come down. But I'm not going to rush into taking any buys or sells on British pound Japanese yen because the cell structure to me looks more like a corrective phase than an impulsive phase. Yeah, I know we are getting wins inside of here, taking cells, hitting our own arrow. But ask yourself a question. If you were not trading, following my guardians, do you know how many losses people have incurred trying to take buys or sell inside of this channel? Okay, let's assume that you have not seen this channel drawn on this YouTube channel. That sounds so lovely. You didn't see this channel drawn, which is this bearish channel. I don't take, like in this case, some persons will be looking to take sell here because price was approaching this channel. First touch, second touch, third touch. People will be looking to take sell here for price to come down. Whilst they're looking to take sell, this is exactly where I entered another buy, which I did not there was no way for me to talk about this buy because as at then price was somewhere around here. I took this buy, got my TP before price turned bearish. So I'm trading using what I call the strategy that is modeled based on my personality, which is one of the strongest ways to see the market. Based on my personality, it made it suitable for me to take buys here, whilst people are looking to take sells. And the impulsive leg gave me the TP I wanted before turning bearish. So if those who took sells here, where would their stop loss be? Most persons would have kept a 15-30 pip stop loss, which is always the case. They would not keep anything like 50 pip stop loss. Even if you were using this level, 162.142 as your level to put your stop loss to, no one would anticipate price to give this middle finger to as high as this weekly support of 162.277 price level. So what I'm trying to say is this, very simple. Whilst you're trying to trade technically, you need to understand the 5 Ws plus 1 H. Always ask yourself, why is price behaving like this? How would you prevent yourself from being on the wrong side of history? A lot of questions you put into perspective. So for today, what I'm looking at is very simple and straightforward. I'm not going to take any sell because if I were interested in taking sell, which I was, my sell would have been somewhere around here. Stop loss above the structure, I'd have gotten my 1 arrow. Sweet. This is what I mean. I didn't take this trade, so I'm going to remove it once after I've put this thing. Are you not seeing? And did you notice that the 1 arrow is right at this golden level? Right at it. But since I didn't take the trade, there's no need putting this here. I got to take it out. Then again, look at this very well. Anybody who is waiting for this to create a top week for them to take sales, okay for them, but I'm not taking any trade at the moment on British pound, Japanese yen, because look at where price came to react from. This daily support of 161.163 price level. Yes, the candle could drop bearish. No one can tell, and I can't tell categorically because it does not suit what I want to see from the market. So I'm going to stay out of any trade on British pound, Japanese yen until I see a reasonable price action. Okay, I like being conservative. Let me preserve my capital whilst I try to earn more. I'm not Bobby Axelrod, but we all aspire to be articulate like him. Okay, let's look at the next thing, which is gold. It's already pre-London Open, so I'm going to be very, very swift. Yesterday we were looking for buys. This is the level I was like saying price, we're anticipating price to retrace to this level. But I gave a catch that price must not get to this level for it to react. It could react from here, it could react from here. Watch the forecast for yesterday to get a better understanding. And if you check those levels, I said price, not I said, market told us it's going to react from those levels. Here, here, those levels, price reacted to the peep on them. Okay, price reacted. If want to use the same criteria, look at it. Price reacted here, came down. Price reacted, went up, but came to close right on this resistance. So whatever you got here as the TP entering this zone is just the week. Okay, so yesterday, if you remember, I said, not I said, the market told us that on the daily we're in sellers territory, on the 4 hours we're in sellers territory. However, on the 1 hour time frame we're in buyers territory. And what did the buyers do? Took price up. Now, what is the sellers doing? Gauging or guarding this price level so price doesn't go above this point. If price goes above this point, it becomes bad for the sellers because then it's entering into the daily territory. But as you can see, we got an impulsive leg, which is this. We are observing the corrective phase, which is this, which is the retracement. So we're anticipating price to as in pump, to retest first of all this high, which is the closest resistance created by this impulsive leg, and finally this point here, retest of this. But this is the conservative TP, this is the aggressive TP. So at the moment, what is feasible is to take buys, except we get a bearish breach here, then we'll consider taking sells. But sweeter sells or sweet sells will occur below this demand zone. Okay, sweet sells will occur below here, whilst we are looking for buys above here. Don't forget the 5Ws plus 1H. If you're doing any of this audit course like the ISO 9001, which is the quality management system, or ISO 14001, which is the environmental management system, you would notice this 5W plus 1H, which is how did this occur, why did this occur, when did this occur, whom influenced this kind of price action, what would have, all those kind of asking all those questions that start with W. The H is just how. Okay, so with that being said, this is what I got for you on gold. If you did not get the explanation, go back, watch the recording, and you'll see what I'm talking about. But your questions, I will entertain them at the end of the explanation. The last I got on my watch list for today is Bitcoin. Bitcoin has not really done any major price movement after it gave the middle finger some days back. This would be Thursday last week. So Bitcoin has just been in this corrective phase, nothing much. This is the bearish dump or bearish movement, they drop, and anything could happen. We could anticipate buys above here, break of this week, or sells below here. But don't forget, technically, we're in seller's territory. And I gave an example using Warren Buffett, that he does not take trades that are not already looking promising or don't have a huge upside potential. Having that mindset would help you out a lot. Like you don't, it's not advisable to take buys because your price has made a low. Let me take buys. That is you trading solely discretionary. You're being discretional, but that kind of discretionary trading or discretionary trading is not very advisable because price does not move based on just speculation alone. It also moves based on the commitment of traders. Where are people, those with huge amount of money, what are they looking at achieving? And the disinterest from people who are trading Bitcoin, how many people are interested in buying it? So the volume of people who are interested in buying have to be greater than the volume of people who are interested in selling. Now, when I'm talking of volume, I don't mean volume in number. I mean volume in cash strength. Okay, those who are interested in buying need to be greater than those who are interested in selling for price to do what? Go up. So if there's an imbalance where the volume of traders who are interested in buying are less than the volume traders in selling, this is what you get, sellers. However, when they are equal, this is what you anticipate, a ranging market. This is what you get. But this kind of ranging market, you can see that the sellers are not as strong as the buyers. Okay, the buyers are showing some strength. They want to push price going up, which is understandable because at this point, sellers are already covering their short positions in order to get price to what is referred to as a fair value price, get price to come up before doing what? Dumping it again. So don't forget to subscribe, hit that notification button down here, comment and like. This is all I got for you today. I want to keep this short, simple and sweet so that we can get on to other things we are planning to do. Baraka Bashad.